Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by CattleFax, the deciding factor. Global petroleum consumption topped 100 million barrels per day in June of 2017, the first time cresting into triple-digit demand. By the end of 2019, global consumption was above 100 million BPD for 3/4 of the year, peaking at 102.19 in July. At the worst of the pandemic, consumption had declined 20 million barrels per day, but demand has recovered quickly. Beginning 2021 at 92.9 million BPD, global petroleum consumption is expected to top 100 million again by November. Earlier this week, the Organization of Oil Exporting Countries, or OPEC, came to an agreement to increase output heading into 2022. The agreement had been delayed for roughly a week after disagreements on baseline output levels from the Saudi Arabians and the UAE. Their current arrangement allows for OPEC crude oil production to increase by 200,000 barrels per day each month through 2022. Crude oil markets responded lower, with weekly spot WTI futures losing $2.50 per barrel, now testing an 8-month uptrend. Prices did recover slightly on Friday's trade, finding support at the 40-day daily moving average. RBOB gasoline and heating oil futures declined in sync with crude oil, while cash prices were finding annual highs. U.S. average retail gasoline prices at $3.23 per gallon are 26% above the 5-year average, and the highest since 2014. Retail diesel prices are 22% above average, but only 10 cents per barrel higher than the same week of 2018. Uncertainty is a recent feature in energy markets, also evidenced by wide swings in natural gas prices. The past 2 weeks have seen 20 to 30 cent swings in spot natural gas futures, but the weekly close-to-close change has averaged just 2 cents. Corn futures were higher this week, but the spot contract technically moved lower with the expiration of the July 21 contract. The new spot corn futures, the September contract, moved 32 cents per bushel higher through Friday's trade. August soybeans were up by 80 cents per bushel this week, while November beans were up 65 cents. Spot live cattle futures will finish this week up $1.40 per hundredweight, despite closing lower for 3 trading days in a row, Wednesday through Friday. Spot feeder cattle futures lost $3 per hundredweight this week. Feeder cattle were mixed in the physical market as well, with yearlings mostly higher, but calves trading from down $4 to up $6 per hundredweight. Fed cattle traded in the south between $117 and $120 per hundredweight, steady to $1 lower than last week. Fed cattle traded mixed in the north from $122 to $126 per hundredweight, prices $1 lower to $1 higher. Thanks for watching. Remember to visit CattleFax.com, become a member, see the latest market news and analysis.